The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.
Oh, we saw plenty of green on the screen on Tuesday's trade, and especially in that grain and oilseed sector with a nice recovery from Monday's kind of just bearishness. We got cattle and hogs in on the action as well. We could call it a turnaround Tuesday. Joining us to talk about it, Jacob Burks with agmarket.net. Jacob, always good to talk to you, buddy. And we were joking a little bit off air. Hey, you get a good day. A lot of positivity in the markets on Tuesday, and it's a good thing to see, isn't it?
Yeah, I think my teammates are usually finding the bad day and saying, "Hey, Jacob, go ahead." But I tricked them, I guess, today. And after a terrible day yesterday, so here I am. We get to finally talk about some positive action in the grain markets. Follow through, like you said, in the livestock, which was just very, very strong today. So. Man, luckiest guy in the world. I get to talk to you on Tuesday and see you on the weekend. So this is going great.
Yeah, you guys have your conference coming up, the Farming for Profit Non-Price Conference happening in Nashville, starting up on Sunday and going into Monday. And that's going to be a great time. I'm looking forward to being there. And I know we're going to talk about that a little bit more here, give another plug later in the show. You guys have a lot on the lineup. But in terms of the markets, let's stick with that here first. Okay. As we mentioned, plenty of green on the screen on Tuesday. To me, Jacob, across the grains, it really felt like a case of market sentiment finally said, okay, this thing has gotten a little too oversold. We kind of overdid it, so let's put a little bit of premium back in. Let's get some money flow back into grains. But we didn't necessarily overdo that either, because there are still a lot of bearish headwinds out there. So I don't know, kind of a double-edged sword, but it just felt like the markets got a little too oversold on Tuesday.
I feel like it. I think a lot of the analysis right now has to do with, okay, who's in the market and who's playing, and it comes back to the COT report, the commitment of traders, what kind of positions we're seeing from fund money, what type of positions we're seeing in the commercial, to where you're looking at the large talk that we've looked at through the first of the year and through the January 12th report was, where's the grain at and who's holding on to it? I think you came through the weekend. I think that we had started off a little bit negative after seeing 4 or 5 days last week where we, or 3 or 4 days where we had some positive closes in the grains. And then it felt like such a letdown on Monday here that there was a lot of farmer producer selling. I think there was a lot of angst as far as, hey, maybe that was our bounce, that was our one opportunity. And you did, just from talking to producers, just looking at some of our commercial entities where, hey, there was some a large amount of farmers that were willing to take that that risk off the table and get some sold there. So, hopefully they were calling us and telling us about it so that we could get some type of re-ownership or some type of safe re-ownership plan ahead of it. But technically this thing's kind of boiled up to where we see maybe a potential double bottom. You went down to the bottom side of the channel and some soybeans. So I wish Brian Split was here with you so he could continue on about the technical analysis here. But there's some major technical supportive indicators that we rebounded on a little bit here today. Right now you have a kind of a pendulum swing in the grain markets where, probably a little bit overdone yesterday as the selling piled on. We found some recovery, to see us recover 26 cents in one day. This could be a little bit of overreaction too. So we're just going to see how that plays out. But, volume wise, it feels like a decent, strong day here. And there was a lot of players involved today.
Well, you kind of you talked about this a little bit, and I want to expand upon this. Even if we maybe overdid it to the upside a little bit on Tuesday, these are chances and opportunities to reward the market a little bit, reward the rally here, considering how price action has been and how much there is out there, the countryside that's unpriced right now in terms of bushels, right, Jacob? I mean, talk about this a little bit. This is a short opportunity here potentially to at least get something going if you don't have much going, right?
I mean, when you go back and you start looking at the position that the funds are in, and mostly not the funds, but the commercial position, and how much grain is not sold this time of year, it's kind of eerie, I guess you could say. And just the correction of that with the funds being so short, you can see that 25 cent bounce just because of that without having any fundamental news. I mean, you look around here, there wasn't a lot of fundamental news, weather in South America, big export sales, anything like that you're used to seeing from the fundamental side that said, hey, here's an opportunity to buy corn, or here's an opportunity to buy beans, wheat. None of that stuff really happened. I mean, we can look at certain things that are light out, political issues, any type of, fundamental reason, or there's some out there, and there's some boiling that if they take place, we'll have that strength. But inevitably, you as a producer, and you're holding on, you're one of that 64% that still has on-farm stocks that are unpriced. This is something that you need to be looking at. What kind of measurement? What are you looking for for this market to reach to take advantage of this rally? So I agree.
Yeah, well, and I think about this too. It's all about having a marketing plan and minimizing that risk. And we talk about this all the time, Jacob. These price levels, although they're not, we're not talking $6 corn and $14 beans. These are still fairly decent price levels with plenty of potential to go lower. I mean, I've heard some people chattering that, we could start seeing some threes on the corn side here, both in terms of the balance sheet, if we have a good production year again in the U.S. and on the board. So, I mean, just thinking about that, it's all about having a marketing plan and not just burying your head in the sand right now, right?
Right. We've spent a lot of time, our whole team going around to producer meetings and talking to producers. And I think Matt put a tweet out there that said the two major threes that we're looking for is the 3 billion bushel carryout the next year, and probably a 3 in the futures price. He just wouldn't say it. And I think that's something that you do have to be careful of right now is making sure that what is your plan going forward, and where are you at? And at these meetings, the one thing that I always tell people is if you don't have an order in, you probably don't have a plan. And I think that's something now when you look at whether you've done a great job and made good sales, but you still have those bushels left. Like, there's still a plan that needs to take place if you've done a good job. If you've done a bad job or a lack of selling, and you're in a position where you're getting to a profitability that's maybe there, maybe not, that's where it's really important that you look at, hey, how can I put that flexibility in plan, and even learn what flexibility is and what we're talking about, and putting those floors in place to where if we do continue to get a 25 cent rally, you have to have the order in. You have to put something in place that's going to take advantage of it when you're asleep at night and markets are trading overnight. So you have to have those orders in place.
And it's not necessarily, we're not saying, oh, you got to sell the farm here. You got to get, everything sold, and, looking at 24, you don't need to get 75% sold or anything, but just doing maybe something and using the tools to your advantage is what it's all about, right?
Absolutely. I mean, it goes down to as small as how to use your storage that you have. I mean, even if you have sales made that are in March timeframe right now, and maybe it's going to pay you enough to hold it out to July, and logistically, that's what you need to do with your storage. Hey, what kind of spread do I want to look at? What do I want to capture in the carry and roll my future sell out to June or to July? So there's managing that side of the business, and first of all, treating your operation as a business, treating that operation as, hey, this is, I have a certain amount of income, I have a certain amount of profitability that I want to take advantage of. Am I there or not? And knowing what that number is key in you being able to make a decision, because anytime you see a bearish market, it creates and breeds indecisiveness. And if we continue to sit and just do nothing in these type of markets, in a bearish market, you continue to lose value, especially in what you have on storage.
We are having a conversation here today on Market Talk with Jacob Burks from agmarket.net. Jacob, a couple other thoughts here on the grain side, and then we'll switch over to livestock. But I look at, new crop corn in that 480 range here, wrapping up Tuesday's trade. You look at on the soybean side, we again had that really nice rally in beans, double-digit gains in the front months in soybeans on the day Tuesday. And I'm just pulling up that Novi 24 contract. But, I guess where I'm going with this is that acreage battle is already starting to be talked about here in the U.S. for spring 2024. November 24 beans, 11.97. So, right at that $12 mark. But I guess, what are you hearing going to producer meetings right now in terms of what this acreage battle could look like? I've heard a lot of, we're going to stick with our normal rotations, quarter beans, but some of those marginal changes could happen on the fringe acres.
Sure.
But I guess, to me, it feels like this is already starting to come into focus quietly as a backdrop to all the other things that are impacting the market right now. What's your thoughts on this acreage battle already starting to kind of heat up a little bit?
I always say every year you have an acreage battle. Sometimes in a down market, it's, who loses the most acres. What kind of value are you going to withstand to keep higher, just so those acres don't fall out of that commodity? I think the first thing that I look at is the spring wheat acres. Like, what's going to happen there? We have a lot of producers up in the Dakotas and up in the Red River Valley there, and it's something that I guess pivotal as far as what other specialty crops, how much goes to canola. There's some of those things that we have to worry about and not go into corn or bean production. But with the continued capacity that we're seeing, I think that's going to keep acres stable enough in the soybeans. If you'd asked me 5 years ago what I think in 24. I would have said we're growing just less and less beans, and we grow more and more corn. And Brazil's going to grow all the beans, we'll grow all the corn, and try to supplement it that way. But over the last couple of years, we've found a little bit more demand through the soybeans. Now we're talking about some real demand. So I do feel like the 178 between corn and beans is where everybody seems to be. It's going to continue to be more difficult for us to reach those 178 numbers, 178 million acres combined. But I think right now what we're looking at is the 91 to 92, so somewhere in that 91.5 million acres in corn. On the bean side, you're probably going to be down in that 84, 85 level of the soybeans. So I mean that'll be big there. I think that these will change quite a bit. I think the USDA will come up in their budgeting forum here in February, and I think that'll give us a pretty good insight of what they're thinking. But you're seeing a lot of different ranges, pretty wide ranges as far as planted acres numbers from a lot of the independent analysts.
A lot of economic stuff this week. Plenty of data out here in the U.S. that I know is being watched in the outside markets. Plus, we got the Fed meeting ongoing right now. You throw in there the China Evergrande news over the weekend that really got us off to a sour note Monday, the geopolitical tensions in the Middle East and the impacts on the energy markets. It seems like I could kind of take all of those items and kind of bundle it into one big bearish headwind, though, that is still out there this week for these markets. What do you think?
Well, I think, it's, politically and, what we're seeing going on overseas is probably doing more for disruption in freight and who these exporters are even looking at to import grain from. As you look at the shipment routes that they're even taking with the problem in the Panama Canal. So you do have a lot of extra problems in the world, besides weather in South America and what kind of production that we're looking at down there. You do have a lot of things that are affecting the value of our commodities. You go in to look at the first time that we've seen imported soybeans into the North Carolina area to produce plant specifically. We're used to seeing that whenever you have this type of dynamics in the market, but just not this time of year. So there's some odd things going on. I do feel like we're going to see a quiet rate cut here. Value of our dollars kind of picked back up a little bit. That's made it a little bit more difficult for us on the export. But we're at that point now in soybeans where it's not even hardly looking at exports, not anticipating any surprises on the export. Corn side of it, we've been strong. But I think going forward, as far as how to manage through this, I think you need to prepare yourself for what could come in these geopolitical risks that we're seeing. Don't do anything to boost the value of our grain, that's for sure.
Let's talk livestock. Cattle inventory report is going to be out Wednesday afternoon after the close of trade, the biannual report. This could be a biggie here in terms of market direction. And you look at cattle and hogs, both on the day Tuesday, good price action. Feeders, the leaders to the upside on Tuesday. Your thoughts in cattle here as we kind of gear up for whatever this cattle inventory report is going to tell us, Jacob?
Well, I think the cash market's been strong in all the livestock markets, and that's kind of what the markets, the futures markets have had to pursue. If you just look across the sale barns and the feeder cattle, I mean, they're just exploding, and I think a lot of that more has to do with these potential farmers wanting to walk grain off the farm as opposed to feed, as opposed to sell it. So I think that's something that you're seeing a small portion of, but it's still it takes some of these regional sale barns and increases the price, increases the demand for what's out there. And we've heard the story. We know how few of cattle are available. We've pushed placements forward so quickly last fall that now you're looking into what's available out there, and it's just a less limited, more limited supply. I think when you look into the report, I mean, the numbers are out there and all over, but you're looking at obviously at a smaller anticipated calf crop down. If we hit that number of 33.3 million. Or less than 30 million, I believe is what we're looking at. That's anticipated to be down 2.4%. That's going to be the smallest one since 1941, smallest calf crop. As far as the total cattle, you're looking at the smallest inventory since 1951. Those are huge numbers. I mean, are huge. I guess not huge numbers. That really can surprise the market. But the thing about it is that information's in the market. You've seen what we've done over the last couple of days in cattle and feeder cattle, and I think any type of surprise will be what comes in those numbers if there's any type of larger than expected inventory.
Yeah, to your point about the cash market, feeder demand at sale barns continues to be pretty solid here, and I think that's a great point you raised. That just watching this overall, yes, we have a hard-hitting report out Wednesday, but to your point, the cash market's still holding up nicely here, and whatever this report gives us, most likely it's going to probably be viewed as supportive long-term, but maybe in the short run, like we've seen with some of the cattle on feed reports, maybe in the short run, it's something that is a little bit of a depression on the futures price. It's hard to say, Jacob.
Well, it's always hard to tell how the market's going to react from a big dump of data, right? So there's a lot of expectations out there. There's a lot of foreseen, the way we do, cattle and what we've seen, we have a pretty good idea where it's going to be. So for a target to miss is usually not there on just total inventory. But I would say that you never really know exactly how the reaction is going to take place in that futures market. And a lot of that has to do with the players in the market and how the funds react, and they have depleted their long position over the last several months. And what we've seen in the market reaction here lately is probably something that has been building that long position back amongst the live cattle. We'll see that on Friday of where we get to today. But I would say that when you look at $5 to $10 higher last week in some of these feeder cattle, these regional barns. The stories out there that producers, the demand's high for what we have. If you look at the reasons why, boxed beef demand pops right back up. We see some economic data that's probably going to continue strengthen our economy. So there's a lot of positive things that have been taking place over the last week, 2 weeks, 3 weeks, and in the protein sector as a whole. So you can't talk about livestock right now without watching the hogs and the cattle move together. A lot of that has been mostly on the beef and the pork side. You've seen boxed beef rally back over 300. You've seen the pork index just continue to gain value. Pulling the futures up, especially today. I think we're up $1.50 in the April contract in the hogs.
Yeah, and to your point on the hogs, I wanted to go there too. I know that futures. Looking at some of those deferred months, we're well into the 80s on some of these deferred contracts here as well. And I know that in the case of hogs, this market has been steadily kind of rallying here since the beginning of the year. To me, though, specifically for hogs, Jacob, it feels like demand both domestically and internationally is going to be very, very key for this hog market here the next couple of months. Yeah, I think the hog market, So the hogs are sometimes the commodity that you like the stepchild nobody wants to talk about at times, and a lot of it's due to the vertical integration and lack of open negotiation. But
I would say that it is a supplementary contract to cattle. I mean, you've seen pork, you've seen poultry, try to take advantage of the rise in beef, right? So to try to be on the front parts of the retail shelf, and that they've done a very good job of it. But when you look technically, the hog market has also seen some pretty good support. We broke out of a channel in the front months, so technically there's some opportunity there as well. I think that the looking at the domestic demand that we've seen kill behind last year, but rallying, being stronger kill here the last couple of weeks. I mean, especially recovering from the coldness snap and the deep freeze that we had a big cutback in both beef and poultry, or beef and pork. But long term, I think demand, for in the exports, were a little bit stronger last week. So our global demand of our product is going to be key when you've seen, the European exports, fall back here over the last couple of months as well.
Well, Jacob, saving the best for last. Give us a final plug for the conference coming up this weekend in Nashville. I know you guys have an awesome lineup. All the Ag Market team, Eric Snodgrass, Randy Dowdy's going to be there. The list goes on. And I'm sure that, folks, if they want to book a plane ticket, you're not going to turn them away here for the conference coming up in a couple of days, right?
We have had some cancellations. I'll sneak you in if you give us a quick call. But Dan Bossy from Ag Resources, Brian Burke out of our JSA, David Hightower. I don't know if everybody owed Matt favors or what, but we were able to get a lineup that's just incredible. It's a really, really good lineup of speakers. This positive day in the grains would make me excited to go. There for a while, I was wondering how I was going to get out of it if the grains kept falling. But we're fun time in Nashville. Nashville's always fun, that's for sure. But I think more so is just farmer sentiment, right? We've seen some a couple of good years. We've been around talking to producers over the last month, and realizing, hey, there's some real need for marketing advice right now. It's been pretty easy to sell at high prices because prices were high. Now we got to make sure that we're looking at the profitability, and that's what this conference is all about.
Well, you can find more details on the conference or reach out to the agmarket.net team very easily online and get some of those questions you might have answered. Agmarket.net. Jacob Burks, good to talk with you. Thanks for joining us. We'll see you in a couple of days in Nashville. Appreciate it.
Hey, Jesse, thanks for having me. I look forward to it.
All right, that's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.
If you miss an episode of Market Talk, you can listen back to the show anytime. Just search for Market Talk on your podcast platform of choice, and you can hear past episodes of the program on demand.